So, Aisha, you're absolutely right that the hopes of a recovery which everyone had on Tuesday because of the market rally and the market setup, they've got dismissed, which is that we are back to square one step forward and now 3 steps back. So, yesterday's market action based on technicals, breadth, FI selling levels, Adani was not a very constructive market action. Of course, the overarching theme was the collateral damage which some of these stocks they had to face. But it has soured the sentiment in terms of what is next and where market and where commitment levels would move in the near term. That's one. So just when it appeared that things were settling down, commitment levels were coming back, the desire to create a long position in a sense was evident, that entire market commitment, and I'm not talking about valuations and news here, I'm first talking about the market commitment yesterday got challenged. Now, Friday morning, unfortunately the global setup, and more than the handover from Dow or Nasdaq, I look at only 2 data points, where VIX has moved and where the dollar index has moved. Let's look at the dollar index. Hello, 107. You don't want to see that, because the combination of dollar index inching higher and yields at 4.4, which means that you cannot say goodbye to FI selling. And that explains that why yesterday, when it appeared that the dollar index had peaked out, the fact that it inched higher, it has also coincided with FI selling. So there is a bit of a sequencing of events for India is not exactly very palatable. The sentiment is sour because of what's happened in Adani group of stocks. Concerns are being raised about how lenders will be able to navigate this impact which Adani group of companies will have to bear now. Dollar index has resumed its upward march at 107, so technically that becomes a bit of an hurdle. And then on top of that, you've got the technicals in terms of the Nifty and the positioning of the market, which are actually inviting for shorts rather than longs.
Okay, that is market positioning overall, and yesterday indeed was a painful day, but just we could recap what's going on across the globe, but lots of moving parts over there. We did see Wall Street and for the most part S&P 500 which logged in gains for the 4th straight day on the chart. You've got the Asian markets as well pretty much tracking that rally on Wall Street, so a fairly decent start to the Asian markets. CPI numbers coming in as well in Japan, so that's something that the street is tracking. Other than that, you did have some macroeconomic data points as well coming in from across the globe with respect to the household numbers, and all of that as well is closely being watched. The jobless claims at 213,000 and you have the jobless claims coming in at near a 7-month low. That aside, U.S. crude oil prices as well that have risen about 2%. There's the Russia-UK tensions, continuing to monitor that. And Nikunj can't ignore the fact that yes, of course, we are seeing a shift to cyclical stocks, but Bitcoin now flirting with 100,000.
Again, it just goes back to this whole strength in the dollar index and what's happening in terms of the post-Trump rally, which is that the assumption in the short term that money will move into dollar-denominated assets, I think is the real deal, and it is getting more and more evident. So I may sound slightly repetitive with this one, but the combination of dollar index at 107 and yields at 4.4, that combination is clearly at play, which is having an impact in terms of the global equilibrium. Second is that you cannot undermine what is happening to crude, coffee, gas, and oil prices. Normally it is the weakness in the dollar index which kickstarts momentum in some of the commodity prices. But there you go. I mean, natural gas prices are at a multi-month high. Brent is now 75, almost 73, 74, which is not scary, but the minute you move from 75 closer to 80, you move into that zone of discomfort. And then in general, commodity prices are moving higher, which could also act to a fear of inflation. So I'm afraid the macros are not something which could be called as very, very favorable. There is a sudden move in commodity, and we'll have to watch the space. It is coming at a time when the China tailwind is not really the most strongest tailwind. So too many moving parts right now. Dollar, commodities, Trump, Adani, FI selling coming back. It will not be an easy market to call. I mean, you don't have a clear line of sight, if I may use that term, in terms of where where you're headed in the near term. Just too many moving parts.
Enviro Infra Engineers Limited now proposes an initial public offer of its equity shares. The 100% book built issue is being offered at a price band of rupees 140 to rupees 148 per equity share of face value of rupees 10 each. Issue opens on Friday, November 22nd, 2024. Issue closes on Tuesday, November 26th, 2024. For risk involved and other details, please refer to the Red Herring Prospectus, which is available on the website of the company, SEBI, stock exchanges and the BRLM, Hem Securities Limited.